After so-called a crypto winter that decimated the value of digital currencies, crypto investors learned that more and more projects have been recently filing for bankruptcy protection. Contrary to popular belief, lack of profitability is not the sole reason that drives a business to a financial crisis. In fact, there are several intrinsic causes for a business to go bankrupt. In many cases, business bankruptcy might be triggered by the overall market condition, such as a recession-hit economy, poor financial management, a high amount of debt, tax structure, or business owners who end up procuring massive business loans in order to finance their day-to-day operations. Just one question remains: why people's digital assets are intercepted and are not accessible anymore when a company files for bankruptcy protection? Because the minute the investors make a consent, their assets are momentarily managed by a third party. But why the investors would agree to such a consent? The answer is quite simple: because they have been unconsciously persuaded to make such a decision. There is also another issue that cryptocurrency lending companies and other projects don't want to talk about, and that is how collected data is managed. One of the most common practices in the cryptocurrency market is data trading. In other words, company that supposedly secures clients' assets allow the big data to act as their clients' wallets. So the problem is not filing for bankruptcy protection. The problem is why the investor's assets are intercepted the minute the company files for that protection. Yes, there are in cryptocurrency markets financial service wallets, such as DeFi's peer-to-peer service, which number one policy is to secure the investor's digital currencies. Most of these services guarantee high security and claim to have enough collateral in case if something was about to happen. But there is another problem. They are not scalable, meaning transaction fees are gradually increasing. In the near future, a chocolate bar transfer will cost more the user than the product itself. And on top of that, the transaction time takes longer and longer, and there is no way that these issues will be solved in the foreseeable future. So if we look at the cryptocurrency market, we are being constantly mesmerized. The question is what or who is the mesmerizer? During the last webinar, we talked a little bit about how much data is infused into our consciousness. We stated that annually, a human being is injected with at least 22 terabytes of binary data, which is the equivalent of 1,100,000 trees made into paper and printed. Or if you prefer, that makes 25 days, 24 hours, day and night watching 4K quality movies. And that 22 terabytes refer to data that is displayed only on the internet. It is virtually impossible to assess how much data on a daily basis is truly installed by means of computers, phones, online games, TVs, or ads in our consciousness. Data are not only algorithms of opinion embedded in codes. Data stimulate humans' desires. Its objective is to ethically steer our consciousness, thoughts, emotions, our decisions, and finally our actions without even triggering our awareness. Data could be segmented into countless groups and divisions. To make it simple, VavPay has divided data into two main categories: STEM data and AntiData. Contrary to popular belief, the sole objective of big data is not to collect information, but rather to sell future certainty, which depends on the user's fulfilled desire. Meaning, the more desires are fulfilled by the user, the greater the future certainty. And that is the critical stage. The moment data is purposefully assigned to stimulate the user's desires, the same moment become anti-data. For the user, a desire is a desire. The user cannot differentiate whether one desire comes from the user's unique consciousness DNA or whether a desire has been purposefully engrafted in the same consciousness. For example, when we pick up a desire to drink coffee or to watch a movie, we don't feel any difference between the former and the last desire, because all desires come from the same source, our consciousness. And that is the point. There is a technology that enables injecting personalized and customized desires. The question is, how desires are delivered to the user's consciousness and activated? A desire to be activated requires a receiver. Why? Because in order to activate a desire, the user has to crave for it first. In other words, consciousness is what matters. Now, to make sure that the users are going to use their consciousness and activate a desire, an incentive is attached to it that triggers the users to crave. And that incentive is called AntiData. AntiData has to provide the user certainty that offered information, financial services, products, or entertainment work. It doesn't really matter how long this certainty works for. What matters and what counts is that it works. The users do not addict from products or services. They addict from feeling of certainty. All injected certainties have the same glitch, however, that the users unfortunately do not pay attention to. And that glitch is short-term. This short-term certainty builds trust, loyalty, and above all, the users addict from it momentarily. When that happens, now is the perfect time to pass on the users new personalized desires, ideas, opinions, or actions to take, which are accepted most of the time without second thought, until it's too late. It is a gradual change. The process is so slight and subtle that the crypto investors have no clue what is actually steering their life and decisions. For example, just as in the physical reality, people want to be recognized as responsible, unique, special, or desired. The same validation is sought in the cryptocurrency market. Why there is such a demand for digital artworks? Because every single user who desires to be admired, not to be judged, or be appreciable by society, has now, as never before, a chance to fulfill that desire. This, of course, creates a huge supply and demand. All what the company has to do is to figure out how to monetize this potential. And that is the only reason why people are losing digital assets in the cryptocurrency market. People are being constantly mesmerized by AntiData. Now, the paramount question is there a technology that allows the users to convert AntiData into new data that do not force the users to fulfill and perform someone else's desires? Yes, there is. And that new data is called STEM data. STEM data is the final outcome of AntiData conversion, meaning AntiData is converted into undifferentiated state, the same way stem cells that are undifferentiated do not have specific structures or function. AntiData conversion, technically called dematerialization, can be compared to the traditional plastic and waste recycling method called injection molding. There is no doubt that the cleaner the air or water, the healthier the environment and our body. I remember when I was a kid, I didn't have any pocket money, so I would collect glass bottles and newspapers. Those days were not plastic bottles, and I would sell the stuff to a middleman for a few pennies. Today we are obliged to segregate waste, and of course we are not paid for it anymore. Actually, it's the opposite, and if we break the rules, we are going to be fined. The same way we clean and protect the environment from waste, we can also clean and protect the cryptocurrency marketplace from AntiData, and on top of that, be paid for it. Thanks to VavPay application, which has wallet and encrypted communicator features, enabling the users to deliver AntiData to the marketplace within a minute. All what the user has to do is to deliver once a day, 6 times in a week, AntiData to VavPay application. To make this process smooth for the users, VavPay offers an avatar called Main, a digital human whose job is to assign simple daily tasks to the users, which aim at finding AntiData. Delivered AntiData is kept within a storage called Masach, and once a week, that is on the 7th day, that delivered AntiData is going to be converted into STEM data. Once the process of dematerialization is completed, STEM data is going to be circled back to the cryptocurrency environment. Let's now talk a little bit about the user's revenue. VAVPay offers to its users two main earnings tiers. Tier 1. The user earns by buying back AntiData from the marketplace. Tier 2. The user earns by providing AntiData to the marketplace. Breaking down the tiers. To do quick math, the numbers provided have been basically simplified. Any user is eligible to buy back AntiData from the marketplace, which is open for 6 days in a week. The user can buy back only 1 unit of AntiData per day. The price of 1 AntiData unit is 10 VAV tokens. That means the weekly investment cannot exceed 60 VAV tokens. On the 7th day, that is once a week, the user delivers AntiData to VAVPay storage called Masach. For that delivery, the user receives 26% on the top of what the user invested. So the total weekly revenue comes to 75 VAV tokens. Now, what is important? Out of this revenue, 10% is deducted and placed in the treasury called ZAN. This would round up the weekly income to 68 VAV tokens. You probably wonder, someone has to deliver that AntiData to the marketplace, right? The user who delivers AntiData to the marketplace receives 10 VAV tokens from the buyer I just talked about in Tier 1. So by the end of the 6th day, the user who provides AntiData should have earned 60 VAV tokens. As in Tier 1, in Tier 2, out of this received revenue, out of these earned 60 VAV tokens, 10% is deducted and placed in ZAN treasury, rounding up the weekly income to 54 VAV tokens. Now, there is no doubt that the user who supplies AntiData to the marketplace should be rewarded with something extra. If the user supplies AntiData for 7 consecutive weeks, at the end of the 7th week, meaning on the 49th day, receives a ground reward. What is that reward? All the VAV tokens that have been stored in ZAN, that includes those deducted 10% from Tier 1 and 2, and all VAV tokens that have been accumulated from all other transactions and stored in ZAN, are going to be distributed between these users who would have delivered AntiData for the 7 weeks in a row. VAV token burning process is divided into 2 main phases. Phase 1. From the ground reward that takes place every 7 weeks, 10% is deducted and burned. And phase 2. Upon completion of the 7 weeks, a new 7-week circle begins. From the first week of the new circle, 100% of VAV tokens that have been accumulated in ZAN are also going to be burned. All these interactions are backed up by VAVPay application that is chained to a scalable, secure and decentralized Nexus blockchain, which offers a wallet that cannot be switched off, as in the case of projects that file for bankruptcy protection. There are numbers of features that VAVPay application offers its users. For example, VAVPay application, which is also a wallet and encrypted communicator, provides no intermediary. There is no third party, there is no big data involved at any stage that scrutinizes the user's wallets. The users are also capable to stake VAV tokens directly from VAVPay application, and there is no email required to log into VAVPay wallet. Only the first login requires a username, a password and PIN, and after that, only PIN is necessary to relogin. There are 2 main investment avenues: to become VAVPay application user and to become VAVPay investor partner. To become VAVPay partner, the investor is requested to purchase in the pre-seed phase, which are right now 14,000 VAV tokens. As you can see, one VAF token comes at this phase to 57 US cents. So what exactly the investor receives? The lowest price, voting trust, meaning the investor will have an opportunity to take part in creating DAO and decide how to manage the company's revenue. For example, whether the revenue should be assigned for the user's rewards or whether it should be assigned for VAFPay wallet upgrades. The investor has also a priority access to all VAFPay projects that are created in VAF Launchpad. In order to complete transaction in the pre-seed investor phase, go to www.vafpay.io/pre-seed. I just also would like to take this opportunity and share with you that we are working on organizing the first Grand Live webinar in a couple of months or so, during which we will host our guest and talk much more about VAFPay technology. But until then, of course, we are going to continue with our regular live webinars. So to sum up today's live webinar, I just would like to thank you for your time. We truly and sincerely appreciate that. And you can also join us on social media, where you would be able to find all the latest news, announcements and updates. And of course, there is no better place to post your questions. So thank you one more time and see you in a couple of weeks.